Futures and options on futures trading involves substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein with your Ira Epstein hotline, and this particular hotline is for Tuesday, the 21st of February, 2012. I'm holding a live chat room on Wednesday, February 22nd, 12:30 Central Standard Time. We're in the center of the country. That's Chicago time, my friends. You should have received an invite to it already. If you haven't, you see our number going by on the screen. You might be wise to call one of our staff, have them send you out an invite. They'll do it instantly, and you're welcome to attend. It is free, and we fill up. Stock market in the aftermarket coming down. Now, you only closed a quarter of a point higher in the S&P, so you're down on that. Could be the old buy the rumor, sell the fact. The bonds and the notes sold off pretty big, but they both went into their Bollinger Bands bottoms and found support. And obviously the market that loved what happened in Europe was the gold, the silver, and the copper. Why? Because it's another sign that the world's going to continue to print its way out of all messes that come in front of it. Doesn't matter what Europe needs. In this particular case, who got hurt? The private lenders. Instead of taking a 50% haircut, they're going to take a 53.5% haircut. So basically, they've lost 53.5% of what they invested in the face value of the bonds. I haven't seen anything on the interest rate that's going to be paid, but they're probably going to get screwed there too. That's what I'd expect to happen. And in looking at all this, the gold, the silver, and the copper, well, they've got different stories. Gold is saying, hey, they're going to just keep debasing currencies. They're going to print money any way they want. That's the thinking there. Silver and the copper probably saying, hey, this isn't bad for world economies. We've saved the bank system in Europe. We've got another issue we've kicked down the road. The more you kick things down the road, you hope that time takes care of it. And I think that's the thinking at work here. And as you can see, the euro went up on that pretty good today. It's back into the 133 range. For a long time, I've talked to you about this 132.50 level being resistance. I haven't really changed my opinion there. And the dollar falling a little bit on the news. Natural gas still up about 4 cents. So let's take a look, if we could, at silver for a change. And what you have here is an old inverted head and shoulder formation. Think of this as the head. This was one series of shoulders, and now if you want to go to a bigger event, think of this back here is another shoulder and another one and a bigger head. You have two of them that have actually gone on. Either way, the market's in a bullish scenario. And the question is, can you carry from here into the 40s? Because the count that I could argue is anywhere from, let's call it 34.5 down to 26 is about $8. So I take the shoulder and I add the difference between this and this, the head and the shoulder, and I get into the 40s. When will it happen? I don't know. Will it happen? I don't know. But I can tell you that in classic training of this type of formation, I believe I'm dead right in what the training is saying. Now we'll see what the market does. Right now, I think the market is building a nice base, and when I blow that up, you get to see it. You can sit and argue now that until you take out this 3,300 level, now that the market's starting to poke up here, this could all act as a base to propel the market to higher prices. It's an ugly chart pattern, not a pretty one. The market has got a pattern of what? These were the highs. You came down. You made a lower and low. So you're making lower lows, and you're trying to make higher highs. So I'm hoping the market will reach wherever that resistance zone is. What's the overall trend of the market? Well, it's up. And it's up because the market's back over the 18-day average of closes. Now, it did spend about 3 days to be exact, under that number, tried to stay under it, and today got thrown back over it. So that's part of this ugliness of this chart. Instead of staying and finding its support against it, moving up, you had the pattern of lower highs, lower lows, and you suddenly reverse it with one swoop to a higher high. A very, very difficult chart pattern. It would have been easier had the market stayed over this 18-day average, but it didn't. We know that the 45-day and the 100, now the 45-day is the blue line, the 100-day of closing averages, and that's the closing prices, are under the market. Therefore, they offer support but not resistance if prices go up. The resistance comes in, as I see it, from the algorithm called a Bollinger Band, which is at 34, let's call it 40, and that's where the market's about at. Something else is happening here that's big time, and you've got to pay attention to it. You see how wide these bands were? Well, they're suddenly narrowing in. Now, unless this just pushes the band and it widens out again, think of it as a pressure cooker that may build the pressure. But there's nothing bearish on this chart. Everything about the chart is still bullish. I hate the chart pattern, but it's pushing on the top part of the pattern. It's over the 18-day average of closes, and the momentum is not oversold. So the bulls have control of the market. The support's back at the 18-day average and again at the Bollinger Band, and until you take out 32.71, I think the bulls rule the day. In the gold market, it's a very similar pattern. In fact, if you come back and take today's action out, look at how choppy this market has been getting. That's not what you call an easy pattern to make any money on. If you sold the market, then it went up and made a new high. If you bought the pullback, it went down and made a new low. If you went home over the weekend, you had a higher high, a lower low. You were fighting a battle against the 18-day average, and today you took off. So now you've got a pattern of higher highs. You still have that lower and low in place. Momentum's turned up, and you're at that Bollinger Band. And look at how that Bollinger Band's narrowing in. The more it narrows in, if it can stay narrowing in, the bigger the ultimate move becomes. Now the question is this enough of it to move? If it does, I still give the bulls control until you get under this last break low of 1706.70. So that's how I'd be viewing the market, at least right now. In the copper market, the battle here is pretty clear to see. The market came down from the Bollinger top to the Bollinger bottom. It got oversold in the process. Lower highs, lower lows. Then you start on Friday with this market that tried to rally, failed, comes down, settles down 8 cents. The resistance, if you rally, should be the 18-day average. In order to break the chart pattern, you've got to take out 388. The market comes up today, fights its battle, and if you look at 385.40, not too bad from where I was saying that would be. Momentum might be ready to cross. The stochastics look as though they're getting ready to cross the red over the brown, and that means maybe some upside momentum. But what's the chart pattern? You're still under the 18-day average. That makes it no buy. You still got the lower highs, the lower lows. That makes it no buy. So the bears are probably still in control against that number, and if you get over 388, then you go into what I'll call this sloppy type trade where the market might try the upside one more time. In the platinum market, you get that same type of ugliness. If you come back to just Friday's action, you got the lower highs, you got the lower lows, you're fighting, you're back over the 18-day average, your momentum is worked out, and you're neutral. Now, why are you neutral? When you lose an embedded stochastic where the red line gets under 80, it's common, and you'll hear me say that, you get to the 18-day average. That's where you're at right now, and that was the battle. Get over 1645.80. And that switches things to making a higher high. Yes, you still have the lower low, but you're making a new high over the 18-day average. That's upside momentum. And if the market can run with that, and it's not a trade that I would tell traders to follow, I'd look for a challenge of the Bollinger Band. That's what happened today. The risk reward stunk. $41 risk in platinum, I don't think that that's worth taking on. And you're immediately overbought. So these charts, as far as I'm concerned, have been one heck of a hard chart pattern to follow. And that's what we talk about. Chart patterns a lot in this. And we're offering you a whole series of them. I've put 12 of the typical ones together in our futures trading kit. It's free to you, 100% free. All you do is call us at 1-866-973-2077, or what you do is you can go to our website at www.iraepstein.com, and we'll be happy to send it out via the emails and our whole trading kit. And our trading kit also includes our mobile telephone application and the charts you see behind me. So you're able to use these and work with them yourself. I want to keep these videos short. I'm Ira Epstein. I will talk to you tomorrow and try to cover more markets for you at that point in time.